read your comments. Okay, so I know you guys haven't heard about what I'm going to. Some of you have, but not all of you. And some of you have, and some of you haven't. So I'll start from the very top because I've already spoken to a few guys and I've given them some assignment to do so they know something about what we're going to share. But I'm going to start all over again and then we take everybody on the same level. So um, if you know something, just keep listening because it'll be beneficial for yourself. So welcome. I'm going to share with you guys something that is very dear to my heart. Dear to my heart in the sense that I love sharing. And when I discovered trading, um, my aim was to learn it and then share with my family or friends because of the opportunities you can get or the benefits you get from trading. How long? I sent you the time. We're going to be here till 9:30, so it'll be a quick an hour and a half. So yeah, back to what I was saying. When I first discovered this, I wanted to learn it and share. So that's it's taking me over three and a half years now because I started learning in 2014 November. That's when I started, and it's taking me till now to actually understand and say yes, I can share it. That's why I'm sharing. Until then, I couldn't share because I was still trying to figure it out. I got the aha moment. When we say the aha moment, it means that everything came together um, just over 4 months ago. Since then, everything has changed, and I want to share it because it's a journey that I want to take some people with me. So that's what I'm going to do now. So let's begin. Forex trading. I know some of you have heard about trading or investment before, and it's not new. It's not a new concept to some of you, but forex trading might be new to you because when we say forex, people don't understand. So let's begin. By the way, I titled my I won't say company, but my group as Think Different Trading. The reason why I put Think Different Trading is because um, almost everybody in this forex business they all think the same. We have about 99.9% of the majority thinking the same, but I want my group or what I'm going to share with you guys for you guys to think different from what the 99.9% of people who does trading think. So that means you're going to separate yourself from the majority of the group because when it comes to trading, it is psychological and you need to separate yourself from the majority because the majority is always wrong. It's just like a head of cattle running. When when they are running, they all run in the same direction. But if you want to be unique, you have to separate yourself. So that's why I put think different because I want you guys to think different. So let's begin. So the first thing is some people might be asking, what is forex? Um, the term forex is short for foreign exchange market, and it's a place where different currencies are exchanged in a continuous fashion by billions of people all over the world. Um, just like you have the market for, let's say, you go to the market to buy food stuff like Tesco, like Asda, um, Morrison's, and all that shops. You go there to buy food. When it comes to Forex, you go to the financial market to buy money. So it's like you're exchanging money. So it's a market in the sense that you're buying and selling currencies. I hope that makes sense. So the Forex market is a market on its own where different people around the world buy and sell currencies. Another thing about Forex trading is why they created Forex is because if someone is in, let's say, UK, and they want to buy something in in America, they will have to buy whatever they buy in US dollars. So basically, you are exchanging the pounds for the US dollars. Somehow you are participating in a forex market, but indirectly. So you just buy whatever you want to buy, and then the electronics will take care of the transaction for you. So you don't see the transaction, but you are participating in the forex market. And forex market is the most is the biggest market in the world basically, because every country trades um, this market. So you have the British trading with the Americans, you have the Americans trading with the Chinese, you have the Chinese trading with the Ghanaians. Is a big market. So about 4.5 trillion. Um, when we finish, I'll give you guys some links to go and do some reading for next time when we meet, because there's a bit of reading that needs to be done. So I'll give you guys the link, and then you can go and read. I'm just giving you um, the overall summary of what Forex is. You can read more, but I'm just giving you the basic before we start. This is just for you to understand what we're going to do. So again, Forex is traded, is the biggest market, one, and two, is traded by every country. So whether you live in the most remote part of the world, you are still participating in the forex market, because you can't buy something outside your country without exchanging the money. So that's why everybody participates in the forex market. And again, we have different types of markets. We have the stock market. I know most of you have heard about stocks. Even a 5-year-old has heard about stocks before. We have the stock market, we have the equity market, and we have the commodity market. So there's different types of market that you can actually trade in, but forex is the most biggest, simply because it's done by every country. And because it's done by every country, it's so easy to actually get in to do it. When it comes to stocks, you are buying and selling part of a company. So with stocks, it's different from forex, because stocks, you are actually participating in a company's buying and selling. So let's say a company like Amazon. When you want to invest in Amazon, you are actually buying the company's shares. So that's a stock. When you make money, you don't make money off the currency, you're making money off the company. So when you participate in the stock market, you are actually participating in the company. So I don't know if any of you have bought stocks before, but if you did, you were actually participating in the company. So let's say you buy 10 shares of Amazon. It means you have a say in the company of Amazon. when it comes to Forex, it's totally different. Forex is not owned by anybody. Is done electronically, so it's not owned by a country or it's not owned by a person. But stocks is, the Amazon stock is owned by the CEO. He can decide to, do anything he likes with it. So the beauty about Forex is, again, it's not controlled by one person. Yeah. Forex market is traded 5 days. So it's traded from Sunday, between, I'll show you guys, UK. I use UK time for the explanation. It's traded from Sunday 10 p.m. UK time till Friday 10 p.m. So it's like a 6 days by 5 days, because mostly you don't trade on Sundays. That's when the market opens in the UK, but you don't trade on Sundays because there's no one trading. So trading is officially 5 days, but technically 6 days. And it's traded 24 hours. You don't close. So when it opens on Sunday, it runs all the way till Friday evening, then it closes. So when you have a trade, you trade you can actually open the trade from Sunday evening, but I would advise not to. You trade from Sunday evening till Friday evening. After Friday evening, you can't touch your trades because the exchanges are closed. So the next topic is why trade Forex. So why am I so hyped to show you guys about Forex? It's simply because of the main reason why we all wake up every morning, especially the adults. We want to make money. That is the number one reason why we trade Forex. But that is not the main reason. As you can see, money is the most frequent cited reason why we trade Forex. And this is perfectly good motive. We all live in the world where we all need money. Even if you can't buy everything with money, certainly money can make a lot easier, life easier for you. And there are some people who trade in the forex market because they see it as a form of gambling. It's not gambling. Some people say it's gambling, but it's not. So they see it as a form of gambling or betting, and it really makes them happy when they win, especially. We are not gamblers, we are investors. So we are investing our own earned money to make more money. It's just like buying a stock and keeping hold of it so that it can earn more profit for you. Same thing with Forex, but in a different way. Some people see Forex as gambling, so they just go there to gamble. But that's not what I'm going to show you guys. I'm going to show you guys a proper way to trade. There are others who trade Forex for just personal satisfaction. So we have actually people who design systems for investors like us to trade the market. So they will design a system and then you go and buy it and you use it to trade. When you buy their system, they become happy simply because they've made a sale or they've made a system for someone to use and is making someone make money. Those people who make the system actually participate in the market, but in a different way. They don't see the market as where they make their money. It's just something that they enjoy doing. So we have those people there. So there's three people. You have those people who see it as gambling. You have people who see it as just an excitement, and you have people who see it as something they can make a living out of. And I put myself in the third one, which is something I can make a living out of, and that's what I'm going to teach you guys to do. Forex trading, however, has many features other than other investment vehicles too. So, like I explained earlier, we have other um, investments that you can do. You can buy stocks, you can buy commodities, you can buy equities, but none of them can be compared to Forex. Forex is just amazing because one is 24/7, not 24/7, 24/5. So you can trade any of the day from Monday to Friday, 7 to 7 or 12 to 12, whatever. You can wake up anytime and place a trade. But we don't trade all the time. When we get there, I'll explain why. But with the other instruments like commodities, stocks, equities, they actually open at a certain time and close at a certain time because it's controlled by someone. It's controlled by, we call them exchanges. So you have the NASDAQ. So NASDAQ is an exchange, stock exchange, where they control some companies. So let's say about 500 different American companies. They all have their stocks there. So if you want to buy any of them, you go to NASDAQ and then you can say, okay, I want to buy XYZ stock. But they have a certain time that you can buy it or you want to sell it, whichever way. They have a certain time you can do that. But when it comes to Forex, there's no such thing like that. You just wake up and then you just open your platform and you trade. We have another one called the New York Stock Exchange. It's similar to NASDAQ. It's just that New York Stock Exchange keeps a different type of stocks, and then NASDAQ keeps different type of stocks. So NASDAQ is for all the technological companies. So you have companies like Microsoft, we have Adobe, we have all the technological companies. That's where they keep their stocks. So if you want to buy a stock from, let's say, Microsoft, you go to NASDAQ and then you can buy it. So that's Forex. Forex doesn't have anything like that. So if you want to buy a currency, you just go to your platform and you buy it. But with stocks, you have to go to these people. Like I said. So why trade Forex again? Forex has a high risk adjusted return. If I say high risk adjusted return, it means um, it's risky, and don't be surprised when I say it's risky. Everything in life involves risk, so don't be scared. It's not risky, but you have to tell them it's risky. You have to tell whoever is learning that it's risky. But risk can be controlled, just like everything. Risk can be controlled, so it it can be very profitable. That's why we say higher. So the risk is high and your return is high. So if you control your risk, then you can make the high. If you don't control your risk, then you don't make high. So it's more of a control. You control the risk and then you make more money. If you don't control your risk, you don't make money. Forex is among the most rewarding asset class for traders and investors. I repeat it again, is better than investing in stocks because for so many reasons. Stocks, before, in the early 90s, everything was about stocks because Forex was actually restricted for only the institutions. So only the banks, only the hedge funds, only the the big banks did have the opportunity to trade. They were making all the money. But when we got into the new millennium, which is from 2000, where internet became so easy to get at home, um, everybody had computers. Um, it changed everything. So now Forex is available to even a child if they want to trade because you can get to open a Forex account just as easy as that. You just go to a website. You have so many of them, about thousands of them. You can go to your website and sign up and start trading. So before it wasn't like that, but now with the change of technology, everybody can now trade. That's why it's so cool. Forex is cool, trust me. It says a forex trader can profit just as easily in a market a falling market as in a rising one. So what it means that like I explained earlier, we have stocks, we have commodities, and we have equities. When price is dropping, I'll show you guys something. Okay, so you guys can see my screen. What I mean by a forex trader can profit just as easily in a falling market as in a rising one is what I'm going to show you. So you have price going from down to up, from up to down, and so on. When it comes to stocks, commodities, and equities, when price is going up, everything is fine. But when price is dropping, like you can see, like this red candle here, when price is dropping like that, they can actually stop the trading when it comes to stocks, equities, and commodities. The exchanges that I showed you guys, these exchanges, Nasdaq, New York Stock Exchange, we have a few of them. We have the Japanese one as well, and we have one in Sydney, which is in Australia. Am I right? Yeah, Australia. And we have one in New Zealand. All these stock exchanges, they can actually stop the trading for no one to buy and sell when price is dropping like that. So when it comes to stocks, commodities, equities, when price is dropping like this, because they are scared, so they can actually stop people from buying and selling. But when it comes to forex, they can't do that because it's not controlled, and that's why it's cool. Because when price is going up like this, you can make money, and then when price is dropping so bad like that, you can make quick money. But obviously, you have to know what you're doing, because if you don't know what you're doing, you will get burned. What I mean by that is you'll be on the wrong side. So let's say price is coming down, but you'll be buying, and it doesn't work that way. Don't worry if you don't understand what I'm saying. It will make sense very soon. But if price is dropping like this, they can't. What I wanted to explain was how much quick money is. I wouldn't say quick money, um, because there's nothing like quick money. If you want quick money, then you have to rob the bank, because that's the quickest money you can make. But we're not going to rob the bank. Quick money means as in you know your stuff, you know what is going to happen, or you've done your research. So when price is dropping, you can know that price is dropping, and then you can join, and then you make the money. So I'll show you. Let's say what I mean by quick money. I'll just briefly show you guys this. On Friday, around 3, I did my analysis earlier, and then I saw that price is going to go up like this. So what I did was I bought I bought this pair, and for price to move from where it is to where it is right now, from down here to where it is right now, I made some money. That's all you need to know. So when the price is going up like this and you know it, you buy it and then you make the money. So to answer your question, Moses official, that's how quick you make the money. You have to know your stuff. Once you know your stuff, then the money will come. If you don't know your stuff, the money will not come. So it will be very, very important to learn. Once you learn, then the rest will follow. Does it make sense? So let's go back to what I was explaining earlier. I wanted to explain this um, the falling market as in a rising one. So you can make money either way, whether the price is going up or the price is coming down. So I explained earlier about the trading the section. It trades 24 hours and you can save 6 days, you can save 5 days, whichever one. But it's from Sunday. This time you just have to convert it into your local time. I'm in the UK, so I'll say 9 10 to 10. So Friday 10, Sunday 10 to Friday 10. That's how it converts into UK. So we trade Forex because they offer the best liquidity. Now, I'll explain what liquidity means. Liquidity means that because you have loads of people doing this, I mean loads of people doing it, it becomes so easy to access. If you want to buy, like I showed you guys, this, if I want to buy it, it's so easy because a lot of people are doing it. And in everything that you go and buy, let's say you go to the normal market, there has to be an exchange. So you give them the money and then they give you the product. So there's an exchange. So you go to the shop, you give them money, they give you product. Same thing with the forex market. You buy something, someone is on the other side of the trade, and then they will give you the other one. So if I'm buying here, someone will sell it to me. I don't know who, I don't have to know who. All I do is just buy because it's done by millions and billions of people around the planet. Someone is going to take my offer and then I'll get in. So liquidity means that um, because a lot of people are doing it, it's easy to access it. Unlike the stock market, the commodity market, it's not liquid simply because you have to have lots of money to actually trade it, and sometimes you can't. When you want to buy, you can't buy simply because there is no one going to sell it to you. So that's what I mean by liquidity. When you are buying, someone has to sell to you. If someone doesn't sell it to you, then you don't have a trade. But when it comes to Forex, it's not like that because a lot of people are doing it. So you can actually get in so easily. Um, your homework would be to, I'll give you guys a homework. So next week, not next week, the next time we meet, I will schedule another day. And then when we meet, you guys can tell me more. So liquidity, the word liquidity means that a lot of people are doing it, so it's easy to get in. That's all you need to know. So when it comes to Forex, it's liquid. When it comes to stock, compared to stocks, Forex is more liquid simply because everybody, a lot of people, I mean a lot, are doing it. Another reason why we trade Forex or I trade Forex is because I explained a bit about it earlier. Like a stock like Amazon is controlled by someone. So you have the CEO, Mr. Jeff, controlling the stock. So he can decide today I am not selling no stock and no one can buy Amazon stock. When it comes to Forex, you can't do that because it's not centralized. it's not owned by one person. So you can't get someone to say today there will be no trade. It can never happen. So that's how cool Forex is. So when you know your stuff, the opportunities that you can make is just endless, because um, no one can stop you basically. So we say we trade Forex because it's not centralized exchange. You don't have the like New York exchange. You don't have the Nasdaq. You don't have the there's this one, the Japanese, I forgot their name. You don't have them controlling the exchange, so um, it's cool. So no one is controlling the prices. So when I want to buy, where this black line is, I don't have Mr. Eddie sitting in his house telling me, no, you can't buy here. Or I don't have Mr. Ben saying, no, I own this currency, so you can buy here. That's that's what I mean by no centralized. It's not owned by one person. So that's a bit about Forex. I know this is just an introduction. We'll talk more about it, and if you don't understand anything, you just ask me. I'll give you guys a homework, and then the next time we meet, you you might have read a little bit about what we've done today, and then we can take it from there. I want you guys to get the introduction properly, because if you don't understand what we're doing, then it will be from the foundation. So get the foundation right, and then you can build nicely on the foundation. So Forex market are traded in pairs. The currency market is traded in pairs. So every country has got a currency. In UK, we spend the British pound. In America, they spend the US dollars. In New Zealand, they stock. You don't understand what I mean by stock, buying a stock. When you buy a stock is different from currencies. So when you come to Forex, you are not actually buying a company. You are buying, like, let's say, a country, a part of a country, but it's not possible. So you're just trading the currency. But when you buy a stock, you are buying a piece of a company. So you are trading in, let's say you are buying and selling money. Put in simple terms, Forex is buying and selling money. Does it make sense, Mr. Eddie? So you're just basically buying one currency. That's it. You buy one currency in exchange for another. Let me make an example. Let's say you're going to, most of you who travel, um, if you're living from UK and you're going to France, yeah. When you get to France, you can't spend your pounds because they will not accept it. So you have to go to an exchange point, give them your pounds, and then they'll give you euros. When you give them the pounds and they give you euros, you are selling the pounds to them and you are buying euros. So if you, let's say, want to sell £100, you give them the £100, and then they'll have this in their room or their shop. So they'll look at the rate that is trading at that particular moment. So this is the Euro British pound. They'll look at this rate. Currently, the British pound and the euro is trading, let's say 87 0.87738. So they'll look at that rate and they say, okay, every 1 euro you get 87 pence. So then they will calculate it, and then they give you whatever your money you give them equivalent in euros. So I was going to go through that in the next slide, but since Mr. Eddie wanted to get ahead of me, I'll try and explain it just a little bit. So you just give them the euro, you give them the pounds, and then they will exchange and give you the euro. But they will look at the currency price at that particular moment. But those people, they are rip-offs. They just rip people off. You understand it later when I explain what I mean by ripping people off, because they don't use the live. So when I go to the shop, they will not use this one to give me my money. They will use something that they've 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 put down themselves. So if it's trading, if the price at the moment is trading at 87, probably they will give, when you go to the shop, they will give it to you for 85. So they will give you less because they have to make money too. That's why they are in the shop. They have to make money of selling it. So they will make money off you. So if you go to the shop, you give them your money, pounds, they give you euros. That's Forex, basically. But this is done through someone called a broker. So it's done through the computer, like this, like I've showed you. So you are buying and selling like on this platform. Does it make sense? So let's go back. So every country, as I was explaining earlier, every country has got a currency that they spend. So in UK we have the British pound. America has the US dollars. Stockbroker, yeah, that's it. It's stockbroker. The stockbroker is where you go and buy the stocks. But with the Forex, you'll be dealing with a Forex broker, basically. Does it make sense, Miss Moses? Okay, let's continue. So we have every country having their own currency. So I've put down here, we have so many currencies in the world. Every country has got a currency. I don't know which country doesn't have a currency. So you can imagine there's lots of them. But there's a but only a handful are traded actively in the Forex market. In the Forex trading, only the most economically and politically stable and liquid currencies are demanded in sufficient quantities. So what I mean by that is because we have about, I don't know how many countries we have in the world, but we have some countries that are politically and economically stable. We call those countries majors. So we have major countries. We have about seven. There's main seven major countries. I've listed them here. We have the US, we have the Canadians, we have the Euro, we have the British, we have the Swiss, we have the New Zealand, we have the Australian, and we have the Japanese. So these seven countries, they are considered to be the most stable political and economical country. They are rich and their economy is good. So that's where most of the trade happens. So when you come to Forex, you hear a lot of people talking about these countries. So every day, people actually go online to go and check the news for those countries to see what's happening on there, because whatever is happening in those countries actually affects the currency. How many of you remember Brexit? When Brexit was about to happen, the British pound was. Let me show you guys so you can understand. Okay. So when when they wanted to vote out of the the European Union, the British people wanted to vote out of the European Union. This was where British pound was trading at. And then immediately after the news that they are coming out of the EU, the price of or the value of the pound dropped so much that it was unbelievable. So it dropped from trading from 1.5 to 1.3, and in Forex that is a lot. Is a lot of change. It continued to go down simply because all those people trading the British pound saw that the British pound is weak, so they kept selling and selling and selling. So that's why I said economically and politically, when something political about those countries is wrong, um, and you know it, you can make money. So let's say on here, if I knew ahead of time that um, the British will get out of EU, I would just sell the British pound and make lots of money. No, I didn't. I actually, uh, when we get into more details, we will go through that. When there is something important to come out, like we knew ahead of time, I think about 3 months that there's going to be a vote. So the week that the vote is going to happen, you don't trade because you don't know the outcome. So when something major is coming out, they'll put the news out there. We actually have a website where we read all the news. I'll show you guys later. We have a website there that we read all the news, so you can go and check and see if there's some news coming to affect the currency that you're trading. If that news is something major like this politically, you don't trade because you don't know what's going to happen. So I was not trading. I didn't lose money that day. I actually made money because I didn't trade on the British pound. I traded on something else and I made money. So yeah, back to what I was saying. Those countries, these 8 countries, 7 countries, are considered to have economically sound and politically sound, and at the same time, when it comes to finances, they do have a lot of money. So most of the trades that later I'll show you guys, you will see that is considered or is one of these countries is part of it. So like I showed you, I traded on Friday. What was it again? Yeah, this one. On Friday, I traded the New Zealand Canadian dollar, and is part of the the countries that I was showing you. So that's the New Zealand, and that's the Canadian. So I bought the New Zealand, and then I sold the Canadian dollar. I'll explain that in the next slide. Um, so yeah, this the main majors is what I've showed you there. There's lots of them. You have the Chinese yuan, you have the Swedish krona, you have the the Singapore dollar, we have the Ghanaian cedis. You don't trade that one because no one is interested in trading that apart from the Ghanaian politicians or the Ghanaian finance people. Then people trade that, but to make money, you don't trade the Ghanaian with anything else. So you concentrate on the ones that I've showed you here. Those are the ones that is traded heavily. So big banks like Barclays, Lloyd's, NatWest, all those big banks, they trade these currencies. So we trade that because they trade it. And when we go through some of the stuff that the banks do, you understand what I mean by trading this. Because if you don't trade this and you trade something else, the banks, do I trade big countries? Yes. The big countries are the ones I've listed here. So you have 7 of them. Yeah. You have the US, you have the Canada, the United States of America, you have Canada, you have the Euro, you have the British, you have the Swiss, and we have the New Zealand, you have the Australian, and you have the Japanese. Those are the major ones. Yeah. Those are the countries that are considered to be stable and they have good political, for some reason they say they're political stability. They have political stability. So because of that, banks do like trust the country to trade their currency. So as you can see, like I showed you guys on the platform here, everything is in a pair. So I'm going to explain how these pairs comes about. The first currency of a currency pair. So all the forex trading, every trade is done in a pair. You do 2 trades at the same time, but it's one. And I'll explain what I mean. So you have the US dollar and then the Canadian dollar. Yeah. You can't buy just you can't use the US dollar to buy US dollar. It doesn't make sense. So you have to use the US dollar to buy something else. Because if you have US dollar, you can't like say you want to buy US dollar because you already have US dollar. So you trade US dollar with something else. So the pairs that we trade is something like US dollar with the Canadian dollar. The first 2 letters represent the country, and then the last letter represents the currency that they use. So in US, they spend a dollar, so it's US dollar. And this one is the Canadian dollar. Does it make sense? So you can then use your US dollar to buy the Canadian dollar. So these two goes in a pair like this. So USD CAD, that's the US dollar and the Canadian dollar. So if I want to buy the US dollar, that means I have Canadian dollar and I want to buy the US dollar. I want to make sure you guys understand this because it's a bit confusing at the beginning because I didn't get it when I first started. It just didn't make sense to me. But with time you will understand it. But I want to explain it so you use the next 2 minutes to explain it so you guys can understand it. So what I mean by every currency, every trade that you place, like I showed you on here, I bought the I bought this currency. What I mean by buying is, let me go back to it. On this one, I have the New Zealand and the Canadian. So I have the New Zealand and the Canadian. So it's something like New Zealand dollar and then Canadian dollar. So what I did was I bought this currency. So I pretend I have this currency. So I want to buy that one. And that's what I did. So it's like you having British pound and you going to the shop and you want to get euros. So you take your British pound, you give it to them, they give you euros. This is what I did. So I pretended to have, you understand what I mean by pretend later. I pretended to have New Zealand dollar and I bought the Canadian dollar. I hope you guys are understanding what I mean. So that's how we come about with these letters that you see there. It's very important to understand this, because if you don't understand this, you will struggle a little bit. So that's how all this comes about. But every country, I don't know if any of you guys know a bit about some of you do know about economics. Anything you want to buy on the financial market, you have to buy it in the US dollar. I hope some of you know that. Okay, good question, Eddie. That's why we use the Forex broker. So basically, when you use the Forex broker, they have the facilities to do that for you. So all you have to do is you deposit your money that you have. I have British pound, so I'll put it in the account that I have with the Forex broker. So when I do that, the Forex broker will automatically buy me the Canadian dollar. So they will, it's done electronically, you don't see it, but I'm just trying to make you understand. You will not see physical or in your account have New Zealand dollar. You will not see that. You only see that you have British pounds. But through the Forex broker, you will get the access to all the currencies. So the broker is acting like as if it's a bank. So with your British pound, if you buy New Zealand, if you buy this currency that I just did, if you buy this, the Forex broker will do it for you automatically. All you have to know is that you know what you're doing. The Forex broker will deal with the rest, with the having the New Zealand dollar and the Canadian dollar. They will deal with the rest. So you don't deal with none of that. That's why Forex is so cool. So back to the explanation. As I was explaining earlier, everything that you have to buy on the financial market, all the institutions, it has to. Yeah, Joe, you don't. It, the currency market or the forex market is trading, is normal. It's just like any market. You just go and buy and sell, because it's always doing that. It's always buying and selling. It's only when something is about to happen you don't trade, because you don't know the outcome. So because you don't know the outcome, that particular day that the news or the event is going to happen, you don't trade. Simple. But if there's no news, you carry on trading as if there's nothing wrong. Does it make sense? Yeah. So there's the the events are there, but obviously you just carry on doing what you're doing. So let's say I don't know what event is major event, like major event. When we say major means something that will change the country's policies or the country's economical status, like the Brexit is a huge political event. Let's say we want to vote for another prime minister, for example. That's another huge political event. Um, I don't know. I know when you understand forex, you will get to know all of this. So don't worry. Just know that the forex market is open 24/5 and you can trade every day. How bad would it affect you? Oh, good question. See, that's my main aim was to show you guys, because you guys have sharp brains. Sorry, no offense to the old people, but I wish I was young and I learned this earlier, because when you understand this, you will it's crazy, trust me, it's crazy. And I've seen a lot of young guys age 21 doing this, and they are millionaires already, but they don't show off. The good thing is learn it properly. Once you learn it, the reason why I'm saying that is because the young guys have got so sharp brains that they can they can actually learn it quicker. The adults have lots of issues, so um, when we wake up, we have so many issues in our head, so it becomes trouble. We will go through that later. But to answer your question, Joe, when the market is crashing and you are on the right side of the market, you make money. So it doesn't matter whether the market is crashing or not. If, let's say, like I showed you earlier, if I knew that the the Brexit, the British people were coming out from Europe, if I knew it in time, I would have made a lot of money, but I didn't. You can't, there's no way you can know unless it happens. But let me show you something. Okay, so Brexit was on 19th. Brexit was on the 19th of June 2016. I forgot the actual date. When Brexit happened, the price continued to go down. So you don't actually have to know when the event comes out, price is still going to go low, because it will not just all of a sudden go straight down. It keeps going down and then a bit up and then down and a bit up and then down. So when the news happens or when the event happens, you will know. And then once you know that the news is bad for the country. So price is going to affect the price, the currency of that country. So after Brexit, this day was Brexit. After Brexit, price kept going down and down and down and down and down. So then you have time to still make money. So don't worry about when the market is crashing, because when the market is crashing is actually a very good time for us. I'm looking so much forward to that event if the market crashes again, because all you have to do is know what you're doing. Because if you know what you're doing, you don't panic. You just, it's an opportunity. Yeah. So um, part of the reason why I learned it is because when I started, they told me this, that when the market is crashing, is the best time to be an investor, because all you have to do is just place yourself on the right side of the market, and you ride profit. Yeah. So let's say when it comes to stocks, that's why I said Forex is cool. When it comes to stocks, then it's the opposite. Because when the market is crashing and you have a stock, you can't do anything because they will actually restrict trading because price is dropping. Let me show you. Okay, this is the I don't know, and if you guys heard about the FTSE 500 or FTSE 100, sorry, FTSE 100. That's the index that controls all the stocks, the biggest companies, the 100 biggest companies in the UK. This is what controls them. When price is dropping like this, it becomes so scary that they can actually restrict trading for the stocks. So all the 100 stocks in the UK 100, they can restrict the trading because it's scary. A lot of people are losing. Sorry for my language. A lot of people are losing a lot of money, and we are talking about millions and billions of money. So they have to stop trading. But with Forex, when price is dropping, like I showed you on the British pound, no one can stop it. FTSE 100, that's the Eddie. Google it. Google it. You can find straight answer to that. Yeah. If you Google FTSE, you will find out what FTSE is. Just know that it's the index that controls 100 of 100 of the most important stocks. You want me to do it for you? Okay, I'll do it for you, Mr. Eddie. See me later. I'll show you. Let me continue. Let me go back to my slide. Thank you, Joe. Well done, Joe. So it's the 100 of the most important companies in the UK. That's the index. When you say index, is it monitors all the 100 companies in the UK. We have one in America known as the US 500. The US 500 controls 500 of the most important companies in America, and it just monitors the price. So when something is going bad, that index will show it. This is the US 500. This That's the US 500. This controls the 500 most important companies in in America. They have the Nasdaq that controls the technology side companies, but that's not the main reason why we are here. We are here to do Forex. So to answer your question, when the market is crashing, you can make money. When the market is going up, you can make money in Forex. In the other ones, no. In the stock and current commodities and equities, if you're on the wrong side, you are doomed because you lose a lot of money. With Forex, just know what you're doing. Keyword, know what you're doing. because if you don't know what you're doing, you will get burned. You will lose a lot of money. I'll make an example. Miles that we started this journey on the day, on this day, on this day, yeah, on this day, in January 2015, in the morning, something happened. The Swiss, the euro, and the Swiss, something happened in that country. They changed something, and then within 1 hour, the currency price dropped like this, and he lost all his money because he was on the wrong side of the trade, and that's what I mean by being on the wrong side. And if he had knew that it was going to go down like that, then he would have made money. But because he didn't, he was on the wrong side, so he lost money. Does it make sense? So and again, that was the initial start. That's when we just started, just like you guys now. And then tomorrow you open an account and then you put money and you start trading. Yeah. So you wouldn't do that. Don't do that. Don't open an account and start trading because you will lose money. Know what you're doing first, and then once you know what you're doing, you can make the money and not lose it. Because any money that you lose, someone is making it. As I said, when you buy it, someone is at the other side selling it to you. So when you go to the shop and you physically give them your money, they take it and then they give you the other one. Same thing. If you buy, like I've showed you, if I buy here, someone is on the other side selling it to me. I don't know who, I don't have to know who, but just know that someone is there. Yeah. And if you're on the wrong side, he'll be making your money. So I'm here. I'm going to guide you guys to be on the right side. Yes and no. If you do understand, that's why I wanted to start with you guys. If you do understand, mom can open an account for you, and then that's it. They just have to use her details, and then she open it for you, and you'll be trading like they wouldn't know, because when you fill out the form online, they wouldn't see you as as a young guy, and when you're trading, they wouldn't know that it's you. So my broker doesn't physically know if I'm a woman or a man or in between. Yeah, when you can do it, and then when you turn 18, you can use mommy, and then when you turn 18, you just have to open your own one. So all the money made in mommy's account, you just take it out and put in your own one. Okay, let me go back because I'm getting distracted from all your questions. So back to what I was explaining earlier. I want you guys to understand the currency pair. I know you've heard a lot about the British pound, so I'll use the British pound. So when someone is going to buy something in euro, you will use the euro GBP. So that means you are going to go to the Forex market, and if you want to buy, you buy this. If you want to sell, you sell this. Same thing. If you want to go to Australia, you use this GBP AUD. So it's GBP AUD. If you want to buy something in Canada, it will be GBP CAD. If you want to buy something in New Zealand, it will be GBP New Zealand. If you want to buy something in Swiss, it will be GBP Swiss. Does it make sense? So the first two, as I explained earlier, GBU stands for the country, and then the last letter stands for the currency of that country. So for your homework, I want you guys to go out there and then search and find all the currency pairs for these 8 countries that I've put there. I'm gonna post it or make them search for them. So by next time we meet, I want you guys to know all the currency pairs. We have 28 of them. If you pair all the 7 that I've given you guys, you come up with 28 pairs. I just did a few of them. So some of them are down here. You have the Australian dollar and the New Zealand dollar. You have the euro and the Australian dollar. You have the euro and the Canadian dollar. You have the British pound and the Japanese yen. So you can have 28. I think it's 27 or 28. So go out there and then come up with them, understand them, because we're going to focus on them the next time we meet. Yeah? So that's the assignment. When I come down here, this explains what I've already explained to you guys. So the first two, the Euro USD, the first currency is called the base currency. The second currency is called the quote currency. Yeah, 7. Ben is 7. So the first currency is the base currency. The second currency is the quote currency. Meaning, if you want to buy the US dollar, you will need, let's say, 1 euro. 1 euro will give you 1.4 US dollars. Yeah. In the same way, if you have 1.4 US dollars, you can only get 1 euro. So let me go back here. If I have one euro and I want to buy US dollars, I'll go to my broker and then I have the Euro USD here. I'll look at the price is currently trading at the moment. Let me open a new one. This one is too. This one is clear. Yeah, that's it. Okay. So if I want to buy, if I have 1 euro and I want to buy US dollar, I'll go to my broker and I'll check how much is trading at the moment. So at the moment, every 1 euro you will get 1.22874 US dollars. Does it make sense? So 1 euro will buy me 1.22878 US dollar. That's what this means. That's what this price means. It means that every 1 euro will buy me 1.22874 US dollars. Okay, welcome back, Mr. Moses. Um, every 1 euro, every 1 euro will buy me 1.22874 US dollars. Yeah. So, what if I want to do the opposite? Because someone in euro, someone in, let's say someone in Italy will go and buy the US dollar. What about someone in US going to buy the euro? So if someone is in US and is going to buy the euro, that person is still going to use the same thing, but this time they'll be selling, they'll be doing the opposite. So they'll be selling this to get that. This is where the confusion is. Some people don't, when I first started, I was confused as well. So I will understand if you get confused here. But basically what I'm saying is, if I'm in Italy, I'll use my 1 euro and then I'll buy the US dollar and I'll get this. What if someone is in US and trying to buy the euro? So they will have to use this to get that. And that's where this comes in. Buy, sell. So on here, I have sell by market and buy by market. You use the same pair. We are using the same. We'll use the same euro USD to do the same thing, to buy and sell the same currency. So if I am, don't worry, Joe, you understand. Just try and understand the foundation. Try and understand what it's all about, and then you get to know why you make a profit. Yeah, don't worry about the profit yet. So let's say I am in euro. Sorry, what do I keep saying? I say euro like as if it's a country. If I'm in Italy, yeah, and I want to buy US dollars, I'll be using this button. If I'm in US and I want to buy the euro, I'll be using that button in simple terms. So it's the same currency, but you'll be doing it on the same pair. Does it make sense, or I'm confusing some people? Okay, quick question. Does it make sense what I'm showing? How many of you understand what I just said? I want to say either yes or no. Okay, you're confused. Eddie is confused. Joe says a bit. Waiting. I want to know if the other people ask. Ben says yes. We've got 3 people confirmed. I'm waiting for the other 4. Okay, I'll take it as if yes, they do understand. So you will be, if someone is in, let me choose another pair, and I'll do the same example. So I've changed it. This is the British pound. This is the British pound, and then the US dollar. Yeah. So if I'm in UK and I want to buy something in America, I'll have to go to the shop, give them my pounds, and then they'll give me US dollars. If I want to do that on here on the platform, which is buying and selling the currencies, if I'm in the UK, I'll buy the British pound and I'll get the US dollars. If someone is in America and they want to buy something here, they will be using this button. Does it make sense? Joe, Eddie, are you still confused? Okay, it makes sense. Yeah. So you will be doing the same thing on the same currency pair. So I want you guys to understand this, the currency pairs, because that's what we'll be doing a lot. Because we'll be going through currency pairs. That's what we do. So on my platform, you can see down here I have loads of them. I have USD, CHF, GBP, USD, USD, Euro, USD, USD, JPY. You need to understand them. Once you understand this, then we can move on, because that's what we'll be dealing with. It's just like going to the market and saying, I'm going to buy fish, tomatoes, onions, and name them. Yeah, it's the same thing. This is a market, so you're either going to buy Australian dollar, Canadian dollar, or Australian dollar, New Zealand dollar, or British pound, Japanese yen. It's the same thing. So it's important to understand this. That's why I said go and find out all the other 27, I think, pairs that we have. There's lots of them, but concentrate on the ones that I've given you and pair them. So you're gonna pair the US dollar with that. So you end up with something like this: Euro, USD, GBP, USD, New Zealand, USD, Australian, USD, USD, Canadian. You're gonna get USD, CHF. And then once you do the USD, you move on to the card. So with the card, I didn't do USD, JPY. Then you're gonna get something like something smaller. You're gonna get something like Euro, GBP, Euro, AUD, Euro, New Zealand, Euro, CHF. Does it make sense? So with this, you can come up with the 28 or 27 pairs that I'm talking about. It's online. It's all online. It's easy to get, but just go and study them, because we'll be using them to do more next time. So till now, whatever I've shared, does anyone have a question? So I'll answer it before I move on. More pairs, more money. That's it, Mr. Eddie. More pairs, more money. More pairs, I would say more pairs know what you're doing, and then more money. What's the lowest you can trade? Yeah, another good thing is when it comes to Forex, you don't need much to start. But obviously, the more you have, the more you can earn. I'll give you guys an example. What I mean by the more you have, the more you earn. So when it comes to trading, when it comes to the Forex, and this is very important, you have to know what you're doing. I keep saying it. If you don't know what you're doing, don't do it. Make sure whatever you do know what you're doing. So if I have 1,000 pounds, yeah, if I have 1,000 pounds, I can trade, I can trade and risk that I showed you guys a statement here. It says higher risk, adjusted returns. It means you always have to risk, and it's not. I'll show you by what I mean by risk later. But when you have £1,000, you risk 1%, maximum 2, maximum 2%. So the risk doesn't mean you're going to lose the money. Don't get scared. The risk means that's the lowest point, that if in case, it doesn't mean you're going to lose. In case you lose, that's how much you want to lose. Yeah. So if I say risk, it doesn't mean you're going to lose. And if I say the highest that you can lose, it doesn't mean you're going to lose it, because people get so scared when they hear about risk. When I say risk, I mean you can take 10 pounds for one trade. So you put 10 pounds on one trade as the risk. Yeah. And yes, the maximum, but you don't have to put £2, 2%. You can only risk, the risk, it depends on yourself. So everybody has got a risk tolerance. At the moment, my risk tolerance is 1%. So every trade that I trade, I risk 1%. So if my account is £100,000, I'll only risk £10. So in case I lose the trade that I place, I only lose £10. But if I'm right, yeah, if I'm correct, then I'll get £30 initially. That's the starting point. So the starting point is you risk 1, you win, you profit 3. We call it risk return ratio, 3-1. So if you risk 1, you expect 3. So every £1 that you risk, you expect to get 30. So if you don't lose 10, you get 30. So if you know what you're doing, yeah, and you take, let's say you take 10 trades, yeah, and then you risk 10 10 pounds on each. If you risk 10 pounds per trade, and out of those 10 trades that you take, you lose 3, yeah, that means you've lost 30 pounds, right? And then you win 7. So you multiply the 30 that you can win with your 3 to 1. So if you risk 1, 10, you make 3, 30. So if you lose 3 trades, you only lose 30 pounds. Yeah. You only lose 30 pounds. But if you, no, not but, you take 10 trades, you lose 3. Yeah, you only lose 30 pounds. You win 7. So it's 7 times the winning that you make, which is 30, and you get 210. Does it make sense? So then, when you control the risk, which is the 10 pounds that you control, you make that when you do a series of trades. So if I'll show you guys something here. Okay. I can't get this to come out. Okay, there it is. Okay. These are all the trades I have going on at the moment. Yeah. So I have quite a few. So on all these trades that I have here, I risk 1%. Yeah, I risk 1%. And the 1% that I've risked, I'm looking to get 3%. So if it's 10 pounds, I'm looking to get 30. If it's 20 pounds, I'm looking to get 60. So the amount of money you will make, it will depend on this. The amount of money you can make trading Forex, it will always depend on your deposit or the amount you start with. So it is very, very efficient when you have more. So let's say I have 10,000. If I have 10,000, that means I just add zeros to them. So if I have 10,000, my risk is 100 and my reward is 300. But when you actually know what you're doing, your risk can be 0.5, which is 50, and your reward can be like 6 or 7, which is times 100. So then if you make 10 trades and you lose 3, or let's say you lose 5, yeah, let's say you lose 5, so 0.5 times 50 times 5 is 250. So then you lose 250 and you earn that. So you lose 250, but you make 4,009. This is how cool. This is how cool. When I saw this, I thought, nah, I have to do this because it's very rewarding if you actually know what you're doing. It's very rewarding. So since 2014 November, that's that's my focus. I've always been on it. I know some of you know me. Eddie knows me. Um, I've always been on it with your mom, but they all dropped out because, as I said, you need to be patient and persistent. Yeah, and determination. You need to be determined because when I first started, we just it's a it's a try and error. We try it, we try that. You try everything to make sure it works, but um, some gave up because they couldn't continue, and I persisted. I continued, and now I can say things are different from when we started. Because if I'm to tell you guys how much I've lost doing this, you'll be shocked. I've lost almost. That's how much I've lost. Yeah, but I kept going because um, I know the potential it has. So if I'm still doing it, it's for a reason because there is potential in it. But obviously, you have to know what you're doing. Yes, that's why I want to I want to show you guys the right way so you don't lose like I did. You don't lose like I did because sometimes I have sleepless night. I can go to bed and my phone is just under my pillow trying to see if I've made some money. So what I want to do is show you guys the right way because I paid a lot of money to actually learn up. One of the courses that I went for just to learn this, I paid. The course was for the course was for uh, the course was 8 grand. That's how much the course cost me, but I paid half of it. I paid that, and then I told them, look, I can't pay anymore, so I stopped, and they took me out of the classes. They canceled but I had graduated. When you graduate, they give you a certificate, but then you continue learning with them online every day. They cancel my account. So unless I pay the other 4 grand, they will not let me study again. So I just stopped. And then I went on and studied somewhere else, and I paid that to learn. But with them, the 1,000 is just for life. So you continue learning all the time. You always learn. So I paid that, and I still have them. Anytime I get confused, I go there to refresh my mind. And this is just fees for tuition for me to learn. And then on top of that, I lost the amount I showed you guys earlier. So you have to know what you're doing, but you need someone to show you. That's why I find it so passionate to do this and share all that I've learned so that you guys. Okay, how much are you gonna pay? Good question, Ben. So anytime I've been to things like this. You just People show you that they're going to come online and they're gonna show you how to trade and make lots of money. And then once they show you all the great stuff that I've just showed you, yeah, there you go. Yeah, all these numbers, it makes you think, wow, this is so cool, I want to do it. And then for them to show you, they'll come up with this. Today is you you are lucky to be here today. I am giving I am giving away special bonus only for today. One time offer, exclusive offer. And then they'll come up with, this is the usual price that I charge, but because you are here today watching me, it means you have determination, you really want to do it. So for you, I'll do it for 999. So if you want to join the next, or if you want to learn more, go to this website, www.xx blah 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 slash special offer. Click on the link, and then when you click on the link, you go there, and then they will have 4,000 cancelled 999. So you pay for 999, and then they will show you more. But it's all the same thing. They show you the same thing, because to be honest, is everybody is doing the same thing but in a different ways. Like, we are all driving cars but different models. We are on the same road but different models. So that's how it is. But good question, how much are you gonna pay? And this is how much I'm going to charge you guys. Commitment, determination, patience. That's how much it's gonna cost you guys. So if you have commitment, determination, patience, then I can I can I can I can show you guys. But if you don't have all these three, then unfortunately you will not I will not show you, because that's what it takes to do it. I'm not gonna charge you anything. I'm just gonna share it because it's good to share. All I need is determination, patience, and commitment. So for today, you know about a bit of Forex. Do a bit of research. Do a bit of research. Again, because millions and millions of people are doing this, there is, trust me, a lot of information online. So um don't buy into well, I could say that, but you know, the most of the stuff that comes free are not well, you know, valued. If you go to the shop, if you go to Asda and they're standing there saying everything is free, would you buy it or will you take it? You wouldn't take it because you would think there's something wrong, even though there's nothing wrong with it. And that's how human beings are. They don't value free stuff, they value paid stuff. So if I say it's free, um, it doesn't, people will not value it. That's all. So Somehow you can say it's free, but it's not free. Okay, so that's all I need. I need commitment, determination, patience. If you have those three, then I can show you. That's all. So for your homework, do a bit of research. Yeah, as I was saying, there's lots of information, so don't buy into those information. Just research what I've given you, and then next time when we meet, I will tell you guys. Next time when we meet, um, we go through something, and then we'll build it from there. Yes, Ben wants to make a suggestion. What's your suggestion, Ben? Oh, yeah. One thing. This this is what made me again buy into all that. When I went for my okay, that's fine. I'll do that. I'll do that. When I went for my first course, the course that I paid, they charged me eight grand. The instructor he showed me, he not showed me, he showed the class. He had an account, and he had this money in it. He had 50 grand in the account, and what he told us about the account made me go mad. Like, are you being for real? So basically, he has this account. He has his business account separate, but this account that had. Okay, Ben, I'll do that. He had this account, and this account that had £50,000. No, 50,000. Our instructor was from US. He had £50,000 in the account, and he is trading that account. That any money that comes on top of it every month. So let's say in a month, like I showed you guys, in a month, you can make, if you take 10 trades and you win 7, whatever. So if you have 50,000, go back. So if you have 50,000 and you trade and you lose, you risk is 1%. That's 500, right? Yeah. So if you lose 3 trades, you lose 1,005. If you win 7, you make that. Am I right? My math is not working right now. So it's 500 times 7. Yeah, 3,005. So if he makes 20 trades, that's double. So in a month, let's say he makes 30 trades. So that's plus 3,005, that's 11 grand. Yeah. This is just an example. If he makes that amount of money, he takes that money and then go on holidays. Can you believe it? They will take that all that money made on that account and then go on holidays, or give it to their wife to go and do shopping, or the kids to go and do whatever they want to do. When he said that, I was like, you are kidding me. Like, you have an account where any money that comes in the account, he will just simply take it and then they will use it for stuff that I just mentioned. So they'll go shopping, random shopping, they'll go on holidays, they'll do whatever. He called it miscellaneous. miscellaneous account, so they just use it for that. And I was thinking, yeah, I need to do this. I want a piece of this. So that's one of my motivations to still do it. And I've actually got one too, but unfortunately mine is not as big as his. So the potentials is huge. So if you guys really want to do it, just have those three things I listed there, and then we can we can do it together. We can start earning money together, especially Eddie, Joe, Miles. If you guys start now, by the time you're 21, you just retire. You just go and live in Barbados if you want, or Jamaica, or wherever, Dubai, because you'll be making money that you don't need to work for no one. Yeah. So I will end here because I've gone well over 25 minutes over, and we will um I will create a group, and then we will schedule the next day to go over more stuff. Okay. I will create the group, and then I'll share, because um I'm always home 3 days, so it will be my next 3 days that I'm home. So next week it will be between, by now and next week, Sunday, Monday, Tuesday. So either next week Sunday or Monday or Tuesday, one of them. So if we do it once a week, then you guys can catch up a lot quicker than doing it like once every 2 weeks. So once a week we'll do this, and then hopefully you guys can start doing something. Is that okay? All right, cool. So I'll just end here for today, and don't forget your homework, because I'll ask when we meet again. Was Miles here? Because, oh, Miles.